Welcome back, everybody, for my portfolio update for August 2025. And we've been on a remarkable run over the past few months, which I called probably not sustainable. And well, it looks like for August at least, that's been correct. But the big swings both up and down after earnings continued in August, with stocks rising and falling 20 to 30% or more in a single day. Now, as for me, I literally did nothing in my portfolio this month, which is probably the first time in I don't even know how long that happened. But let's take a look at where I ended up. Now, we're back in Snowball Analytics, and as of September 1st, my account is currently at $444,725 and some change. And if we take a look at the actual breakdown, I've adjusted this to see how we did for August only. We see that my account value was down $8,741 for the month in terms of actual dollar value. And if we take a look at performance only, we see that performance was down $9,541.18. And again, that's because I had my normal $800 contribution this month. And that's why the portfolio value shows that it's down a little bit less, because it's counting the cash that I added into my account. But that's also why we always use the performance graph to be able to see how I'm actually performing, because that way you know it's real gains and losses as opposed to me just adding money into the account. Now, if we look at the breakdown, we see that it was 100% capital losses, no dividends, no realized P&L, just my stocks being down for the month. And we're going to talk about this a little bit more later. Now, as you can see for August, it started pretty much as a bloodbath on the first day, being down 5%. It tried to recover throughout the month, but just never really got there. But let's see how I did against the S&P 500 and the Nasdaq 100. Now, for the month, my portfolio was down 2.1%, with the S&P 500 up 2.05%, again, accounting for the timing of my own buys and sells, which in this case, I didn't actually have any for the month, but still. And the Nasdaq was up 0.95%. So we trailed both indexes this month, and pretty substantially. I mean, over 4 percentage points against the S&P and over 3 percentage points against the Nasdaq. And like we talked about last month, I mean, we've been on such an amazing run over the past few months that, you have to expect a little bit of a pullback, and that's okay. Now, if we look at where we stand year to date, we see that my portfolio was up 24.7%, and the S&P 500 now up 10.95%, and the Nasdaq up 11.83%, again, based on the timing of my own buys and sells. So even with a bad month, I mean, we are still pretty handily outpacing the indexes for the year. I mean, over doubling them. And so, yeah, I mean, things can change pretty quickly, but so far we're still performing well. And if we look at the performance of my portfolio since I started it on December 8th, 2022, we see that my portfolio is up over 80%, the S&P 500 up just under 62%, and the Nasdaq is up over 92%. So since inception, we're outpacing the S&P by a little under 20 percentage points, but we lost some ground on the Nasdaq and now trail by around 12 percentage points or so again. And we had been making up some ground there pretty aggressively over the past few months, but at least for this month, we're giving some of it back. And look, we should expect some volatility here, especially when you look at what's happened over the past 12 months. And I mean, especially over these last 3 or 4 months. I mean, we've seen huge gains, and taking just a little bit of a breather in terms of performance, again, should be expected. And it's just a question of, is this the start of a longer downtrend, or is it just kind of a small blip and the market's going to keep heading up? We don't really know, and time will tell. Now, if we take a look at what I bought and sold for the month, well, it was nothing, actually. I added my normal contribution for the month, but there wasn't anything that really struck me as me wanting to buy it right now. And I think this is a good point, right? Like, we don't have to buy stuff every month. If you don't see anything that's attractive enough to use your cash to spend on, then it's okay to wait. There's no big deal. For me, a lot of the stocks that I've been buying over the past 12 months have gone up quite a bit. And so I'm always a little hesitant to keep adding to those positions when my cost basis is quite a bit lower, just because, I don't know, it's partially a mental thing, but also just you're wanting to look for maybe a new opportunity or something that looks a little bit more attractive. So, we'll see what happens over the next month, and maybe I'll get a chance to use my cash. So with that said, let's take a look at my updated portfolio allocation. Now, NVIDIA is still in the top spot at over 17%. Amazon is next at 16.37%. Meta, third at 10.8%. TSM is still fourth at 10.38%, and Cloudflare is at just over 10%. And I don't know why, but it tends to be for me that those top 5 tend to hover around 65% or so. That's been the case for as long as I can remember. Now, Visa is next at just under 8%. Snowflake jumped up to around 7.5%. Coinbase down big this month and now at 6.85%. Google is at just under 6%. Palantir is around 3.5%, and cash is around Pi at 3.14%. Now, if we take a look at what holdings performed the best over the last month, Google was the best performer of the month and just under 11%. Snowflake was up 6.78%, and it's crazy because it was up just 20% plus in a single day, so it must have been really down big before earnings. Visa was up 1.83%, and Cloudflare was just barely up at 0.5%. Now, the rest of my 6 positions were all down for the month, starting with Palantir, down just over 1%, Nvidia down over 2%, Amazon down 2.18%, TSM was down around 4.5%, as well as Meta also down around 4.5%. And Coinbase, which had been on a tear, was down a whopping 19% for the month. And I mean, Coinbase is going to be a volatile one. That's why I said it's not necessarily going to make sense for everybody. Now, if we take a look at what holdings have performed the best overall, and remember, this is just price return since I take my dividends in cash and reinvest manually. Cloudflare still in the top spot at over 107%, Nvidia at over 94%, Meta up over 48%, Visa up 43%, Google has had a very good few months and is now at 40% gain, Amazon at 34%, Snowflake at 32%, Coinbase is at 27% gain still, even though they were down 19% this month. Taiwan Semiconductor is up 20%, and lastly, Palantir up 11% after about a month and a half or so. Now, if we take a look at my investment income specifically for the next 12 months, we see that my annual dividends and interest are at $1,160 and some change compared to the $1,153 that I had in July, which is an increase of a whopping $7 from last month. Now, in terms of overall dividend yield for my portfolio, it's now at 27 basis points. But again, as you guys know, this isn't really something that I'm focused on, so these numbers, at least at this point, aren't really all that significant. And speaking of not really significant, if we actually take a look at what dividends hit my account this month, well, you'll see that there were none. No dividends for the month of August. So again, nothing bought or sold. No dividends for the month. Just a pretty uneventful month of me holding companies that I believe in and watching them go down. All right, so let's take a look ahead to next month and what holdings I think I'm going to add to going forward. Now, in terms of my current allocation, the only one that I want a higher allocation to right now is still Palantir, and we talked about that last month. At this point, I'm just kind of waiting and seeing what happens with price. Maybe if it gets closer to some of the moving averages, specifically on the weekly chart, I may, buy then, but we'll just have to see. In terms of ones I think are good value right now, things have come down a little bit over the past month for a lot of these. So if I'm just looking at value versus growth prospects, Taiwan Semi is an obvious one, which we talked about a bunch. Nvidia, believe it or not, with their latest earnings, look even more attractive since their growth guidance was strong. In general, though, it's the same as last month. I'm not really looking to add to any of my existing positions right now other than Palantir, unless we get some really weird downtrends happening. So we'll just have to see. Also, I posted about this yesterday, but I tweaked my projected cash flow calculation a bit better to line up with what you'll see in other places. Now, originally, I was always taking the trailing 12 months of performance into my calculation because I wanted to compare against the most up-to-date results. But the issue is that analyst estimates don't really go by like a next 12 months time frame. They go by fiscal year. And so what was happening is that as stocks get closer to the end of the next fiscal year, their growth rates were getting compressed because part of the growth was already realized in the trailing 12-month data, but the growth estimates stay within that fiscal year time frame. So it didn't really make sense to do it that way because you have this phenomenon where the results and the projections start coming together and it just makes the growth rate look real small when really it's just a timing problem. So instead, I changed it to work more like it should, where the projected takes the previous fiscal year results to the next fiscal year results and determines the growth that way. And while it's not perfect, the partial performance for the current year is already kind of integrated into the analyst estimates, which get updated all throughout the year, right? So it was just a better way to do it. It's more like what you'll see other places. And, no way is perfect, but to me, that was the more accurate way. So I changed it. So like we do every month, let's review my portfolio strategy. Now, my purpose is to provide a high quality of life for my family in retirement, so we never have to worry about money. My goal is to beat the S&P 500 in total return by 20% or better without impacting how much quality time I can spend with my family. And then lastly, my strategy is to attach myself to companies who have tangible market advantages that align with secular trends and are generating increasing cash flows with efficient capital allocation. All right, so in terms of the family update this month, I actually don't really have a lot. We've been really busy just getting back in the groove of like my daughter's back in school. We're dealing with my wife's car this past month. If you remember last month, we got in an accident on the way back from South Padre Island. And funny story, as my wife's car was in the shop, my car battery decided to die one day. So we had no cars, but we got it fixed. It wasn't a big deal. Life happens, whatever. But I do have an update on something that I've been working on and basically spending all my time on recently. You might have noticed that I've been using a new site in my videos when I go through my stock analysis, and that's because I decided to create my own stock research automation tool. Now, we just talked about how my strategy is to beat the market, but the other part of that we don't talk about a lot is that I don't want it to take time away from my family. And that's one of the reasons why some people don't pick individual stocks, because they're like, look, I don't want to spend all the time to do this. And even for me, a lot of time is spent just trying to get all the information I want to see in the way that I want to see it. And you guys have seen that in my videos when I go through those analysis slides or little PowerPoints that I make, because I would spend a couple of hours on each stock just getting all that information in there in the way that I want to see it. So I just said, you know what, I'm going to automate that, and that's what I did. Now, my site is called Stock Bites, and it's at stockbites.io, not .com, so make sure you go to the right place. But this has been really fun to build. Now, this is something that I actually built myself. I didn't hire developers and all that. I used to be a programmer back in my previous life and basically used help from my friends Claude, Gemini, and Grok to learn some new skills and actually put it together. So obviously, I think it's pretty cool. It's built completely on the Cloudflare stack, so modern infrastructure. It's fast. It looks great on desktop and mobile both, and has a bunch of unique features that, at least for me, have been really helpful. And in general, I've just enjoyed building something again. That's been really fun and something that I'm really proud of and just getting started, honestly. Now, in terms of what it is and who it's meant for, it's a stock research automation tool. So it's for people who want to pick individual stocks. And for anyone who likes my personal strategy and the stocks that I pick for my own portfolio, the default rating system, top ranked stocks, and layout of the site is literally my own process. I mean, I automated it, so it's there for people who want to see those things the way that I tend to see them. But what I ended up doing was actually expanding it. So what's cool is that if you don't like my strategy at all, you're like, dude, you don't even use valuation anymore, and I hate that. Well, it's still useful for you as well, because you can customize the rating framework to make it whatever you want. And then the ratings on the site are actually based on your own strategy and not mine. And even the top ranked stocks that you get shown are based on your own criteria. So it's really helped me save a lot of time, but I'm going to go through a full review video of it later this week when we'll talk about all the different features, go through who it's meant for, who it's really not meant for, and all that. Fun stuff. Now, performance-wise this month, it wasn't so fun, but it's to be expected, right? We've had an amazing 3 to 4 month run. A little bit of a pullback is healthy. It's normal. It's just a question of, okay, is that going to kind of reverse here in September and go back up? Or are we in for a longer downtrend? Which is, again, why it's so important to buy stocks that you actually believe in, not just react to whatever the price is doing. All right, so if I recap what happened this month, the portfolio was down over 2% and trailed the S&P 500 and Nasdaq by a lot. We're still crushing the S&P and Nasdaq year to date and the S&P since inception. And I built an automation tool to help save me time supporting my strategy goals. So how did you guys do for August? Let me know down in the comments. Now, if you guys want to see what I thought about the latest earnings from NVIDIA and Snowflake, you can watch that by clicking this video right here. Hope you guys have a great day out there. Financial independence is true freedom, so keep building and stacking wins, and I'll see you on the next one. Peace.